Well, hey, good morning, everyone. This is Laura Pinozzi. I'm with KNE Realty, and we're starting our first podcast today with Michelle Wilson from Mortgage One,
Hello.
and
Hi, Michelle. Thanks for coming.
and
Absolutely.
Kristi
Thanks for
Roberts,
having me.
owner of KNE, is here with us today as well. And we're starting a series on MSHDA. What do you need to know about MSHDA? So we're excited to be here, and because there's just a lot to know about it, and a lot of ways we can help people out there.
Absolutely. It's a great program.
Yeah.
It absolutely is. And
So-
Mortgage One is number one, so we're very familiar with it. And that's the key to the component of it is knowing the information.
Yeah.
Because there's many, many, many misguided information. So what that means is that people will come up to me or call and they'll, hey, can I do this? No, that's not correct. Or no, I can't do it because they said I didn't have this credit score or didn't have this money. And there's ways to guide around it. So you have to really understand the program, but it's fabulous to work with it.
So why don't you tell us in normal buyer terms, what is MSHDA and how can a buyer benefit from it?
So MSHDA is a state program that is offering assistance with home ownership. So they can be a first-time buyer, they can be a repeat buyer. The buyer is going to or have to qualify for a program. So they have to qualify for FHA, they have to qualify for conventional, rural development, VA, something that a program. So they come to you with a pre-approval that says, I am pre-approved, but I don't have money. So, okay, borrow your 401k, borrow against a friend or family. You know, where's this money coming from? Or the state has money available that says, we want to help you purchase this home. So if the state was to say, I will give you $7,500 or $10,000, depending on the zip code you purchase in, to help you purchase. So now, if you need to bring 20,000 into the bank, you have 10 coming from the state and 10 from your own money. If you need to bring in 7,000, the state's got different programs that can bring your payment down. So it just depends on what program you're purchasing with, how much you need. And instead of liquidating your bank account, because we all know you have moving expenses, you might have to paint the house, you might have to repair something. So you're still qualifying for a loan. All it is a second lien to assist you on purchasing. So what that means is you do have to pay it back. And a lot of people are getting out there and saying, oh no, I've had it for 9 years, I don't have to pay it back anymore, or I've had it for whatever. It is a lien on the house. So it's like me or the state offering and saying, hey, if I give you this $10,000, when you sell or refinance, you can go ahead and just give it back to me with the value in the home. So if you make $50,000 on your home, just give me my 10 back and keep your 40. You know, whether it's 10 years, 20 years, 30 years, there's zero interest on it, and it's the balance of what it is. So it does have the payback mode. But the advantage to it is you're not liquidating your bank account. You're not shorting yourself all this money. And you can be a repeat buyer. There's different perks and benefits to it. But
So is there so many years before you can, if you're a repeat buyer, is there a timeline?
Well, so MSHDA classifies a first-time homeowner as not owning a home in the past 3 years. So you could have owned a home for 20 years and sold it 4 years ago, and you will be considered a first-time buyer. So you can get all the programs that are available based on the qualifications. So if you're a repeat buyer, there's targeted cities that they're encouraging home ownership. So you could sell your house that day and close with this program that same day, as long as you call it. But you have to get rid of it first or qualify with it, but the equity counts against you. So there is an asset restriction. There's a couple other things, but there are times where we have had people that own a home and can still purchase a home with the down payment programs.
Now, I know credit is a big topic. What kind of guidelines are there around credit with this program?
So you do have to have a 640 credit score or higher. There's a secondary program that has to have a 660 credit score or higher. So a manufactured home requires the 660. A regular stick-built home or a condo or whatever that you're purchasing, that has to have a 640 credit score or higher. Now, that credit score can be improved when you go through the transaction, but even if you have a 640 credit score or an 800 credit score, MSHDA views you the same way. So they're not going to alter your rate. They're not going to alter, transactions. You still all are meeting the same guidelines. So, which is beneficial to people that are kind of nervous or worried about what they, have credit-wise. And then that said, they do have to meet, again, the guideline regulations for credit. So if they have a 640 credit score, they may not be able to go conventional. You know, if they have the 680 or the 700, 800, they're still going to be able to get a conventional loan and still get the MSHDA money.
So just to clarify, so if I were a buyer coming in, I would get pre-approved for my traditional mortgage, like FHA, conventional, something like that.
Correct.
And then I would have almost like a secondary application for MSHDA or qualification factors.
Yeah, so it's one and the same. So we would have to write the first loan and the second. So if someone came to them and say, oh, I have this pre-approval, and it's at a bank or a company that doesn't do MSHDA at all,
right,
and they're looking for help and you suggest it, they would have to go to a MSHDA-approved lender. So if they called us, we then know, and the questions we ask are, you know, where's your money coming from? You know, what areas are you looking to purchase? What's your purchase price? There is a restriction. So as of right now, it's $224,500 on a purchase agreement. So I've had a realtor call me and she's like, they tell me they can't get this MSHDA deal through. Well, as soon as they sent me everything, I said, well, it's because you have a 225 purchase agreement. Change it to 224.5 and you're fine. So it's knowing, like understanding those guidelines. We may have a client that could qualify for 250,000, but we say, if you do MSHDA, you have to do the 224, but then you go, you know, the 225 would be without the program. So, but the program is there to offer the assistance. And I've had first-time buyers, which we all have, are single moms or single dads or a fresh married couple or just an individual.
Or even a couple not married.
Or not married, yes.
Yeah, so two individual names.
Yep,
yeah.
and they're looking to purchase. And they just, you know, they can't get anything qualified. And I've had people crying on the phone because they were able to accomplish homeownership is a big deal.
It's huge.
Sure. It's huge. It's somewhere to put your kids. It's somewhere to put your family. Somewhere to put your dog.
Right.
I mean, many clients have called me too, and they said, I need to have fenced-in yard for my dog. Like, they don't want to separate the dog. The apartments won't take it.
And one of the things that I've run into is well, I have a good credit score, but my partner doesn't have a good credit score.
That's huge.
You know?
So there is a program where you can not include one or the other. Okay. So MSHDA there's about 4 different programs that you can bounce off. So the first one is, yes, we're going to put both of them together, both husband and wife or partners or whoever. Anyone over the age of 18 is on the loan, and then they have to qualify for income, credit, debt ratio, all these components, and then they do it together. But yes, if one person doesn't have the score or doesn't work for qualifications, then we will piggyback and go to the second one, which is called the Flex program. So now they're saying, okay, well, we will take that one only, and I have a transaction going on now where they wouldn't be able to get a home otherwise, and they're still going to get the down payment. Now, the $10,000 one is only for the first program, so where they'd be together. But they could still get the $7,500 one on that Flex program.
Okay.
So there are ways to benefit them on being able to do that as well. And then depending on where they can do it. And then you're not restricted. If you're a first-time buyer, everyone says, oh, I have to buy in the specific zip code. It's anywhere in the state of Michigan.
Okay.
Just certain zip codes have higher allowances.
Correct. So specific zip codes are targeted with $10,000.
Okay.
So, and I tell people, don't pick your house based on the zip code. You know, pick the house based on what you want, and then let's see what we need to do to fix it.
Now, real quick, I have a question for you. Does the state ever run out of funds? Is it something that they have a certain amount allocated yearly, or is it something that's never ending?
We have not. So they purchase bonds in a big bulk amount, and then they set the rate for it. And then when that starts depleting, they have their next paperwork filed to purchase the next set, which we will then be notified whether the rate goes up or down depending on what the current rates are. And then so we have not, or I have not experienced anywhere where we've ran out. So we've always been able to still move forward with the program. There are some other county programs I do know of that those ones have run out and have been in holding patterns. Okay. But the state program, MSHDA, has not. So it's actually really beneficial in that strength of it as well.
That's awesome to know. Mm-hmm.
So another thing to keep in mind as far as it goes is a lot of times agents will take a transaction or they come in and they go, oh, I don't want to deal with it. It's more paperwork for us. There's nothing more a realtor has to do.
Right.
So it's more that we have to do. And that's why some companies don't offer it because they aren't familiar with it. The components of it and the breakdown of it. There is a class that's required, the education class, but we have a free one that I offer or that goes through online. There's ones that they can go into the classes on. So there's different components that we educate them. So if they're not told ahead of time about these classes or the things that they can do, then they have to get it halfway through. So then they struggle or they fast forward. So the important initial information is important to discuss as well, like what they have to do to qualify. And to qualify, yes, is the credit score. Yes, there's an asset limit of $20,000. So if they have $25,000 in the bank, but they have a $6,000 credit card, they are absolutely allowed to pay that credit card off. It's benefiting them. It's making their debt ratio better. They're paying themselves something that they had, and now their assets do meet the requirements.
So one of the things that you had mentioned a few minutes ago is that anybody over the age of 18 needs to be on the loan, and it's combined income.
Correct.
So would it also affect as
Students?
yes.
Yes.
Thank you.
So if they're living in the house, but if they're full-time students, they do not. So we just document, like we get transcripts, we get paperwork. But yes, if a student, and that income is incorporated.
Now, what about like Social Security income? So maybe the family or the household that has somebody who's disabled living in the home and another party who's working. I know in a lot of instances, disability income is not counted.
It is.
Is it counted as this?
Absolutely.
Okay.
Yep.
Okay.
So, and sometimes disability income can be elevated to help assistance. So it just depends, again, on all the components of what. So we try and take in, it's a puzzle. You take in all the
Right.
pieces and you put it together to benefit the client. So, and you don't want to force
And everyone's
them into,
different.
Exactly.
Exactly.
Yeah, it is a
Very
different puzzle.
fluid.
Too. Yes, yes. And there's a third program. It's a Michigan credit certificate. So you are going to get a credit which helps with debt ratio. So now if someone has money but they have debt to income problem, there's another program available to help with that. So again, there's all these different components that can come into play. But what the misunderstanding is that people think that MSHDA is its own program and money as a loan. It
Right.
is only as a second. So it's the assistant. So you're qualifying for FHA, conventional, RD, VA, whichever component you want. And then MSHDA says, how can we help make that stronger? And in my opinion, because they've met the qualifications for MSHDA and qualifications for the loan, if presented properly, it's a strong offer.
Sure.
So now they have extra money instead of less money.
Right.
Because they're having money that this is where the down payment's coming from. Tracking of funds. Like sometimes people are like, oh, well, I'm going to get it from this person and put it in this bank account and this person. Like that, every money has to be verified.
So would a buyer possibly think, well, I make too much money?
They could.
Okay.
And the income limits, actually, and I've included them. So some of the income limits, depending on how many people are in the household, can go up to $149,240.
Oh, wow.
So if there's
That's
three
great.
or more, and they're buying in Washtenaw County. So it depends.
Okay.
So it's county driven, it's city driven, it's how number in the household. So they could have husband, wife, and a child, husband, wife, and grandma, husband, like, or two partners or, two friends, can be purchasing. So it's 1 to 2 has one category of income, 3 or more is another category of income, the county, the target areas. And target areas are ones that, again, they're encouraging home ownership.
Growth.
So you can do repeat buying. You can do more down payment in some of those. So it's a good program to, assist with those components.
Okay, good.
So this is more on the real estate agent perspective of things. Is there anything, if I were a listing agent and I had a buyer come in with a MSHDA, with the FHA using MSHDA, is there anything that would add an additional layer or additional work on the transaction?
No.
Going from FHA approval, because then once it's approved by FHA or whatever, whatever type of loan it is, once you get the actual mortgage company's approval, then it goes to MSHDA, correct?
Correct.
And is there anything additional that MSHDA looks for that the loan officer may not look for, or any potential red flags or hangups
Well, hopefully
that could cause an issue?
Hopefully usually no. But example being, if the loan officer, like I will always ask my customers before, okay, we're getting cleared with MSHDA, send us another pay stub. So everything with MSHDA has to be within 30 days. So if my pay stub is, 5 weeks out,
Yeah.
exactly. I'm like, they're going to ask me for another one. So get it to me now. And when I send it in, so there's a stacking order that MSHDA wants. There's paperwork. So we will have you call it like a one touch. So it goes to MSHDA, they look at it, it's all in order. Yep, here's your certificate. So if you're familiar enough with the guidelines, there won't be any hiccups.
Right.
If you're not familiar with the guidelines, yes, there could be something that, wait, you have to describe this deposit. MSHDA is an income-driven program. So on a bank statement, if there's 3 or 4 or 5 deposits from somebody that's unknown, or like a Zelle deposit or Cash App deposit, like, where's this coming from? You know, and sometimes clients have to write a letter, and I tell them ahead of time, I'm like, I'm sorry, this is a little bit more detailed, but it's only because we have to verify there's not extra income coming in. So example being is, if I went on vacation and my friends ended up, you know, Venmoing me money, and it says Venmo 200, Venmo 200, Venmo 200, well, did you sell something? Is it a job?
Right.
Like, how did you get this money? So
Somebody borrowing you money to close on your house.
So exactly. So it's like, well, how are you doing cash deposit? Like,
Right.
cash is not king, you know. So documentation is everything.
Oh, yeah.
And that's why that communication of that. So yes, it could be where I went to MSHDA, and yes, they could come back and say, hey, just explain this. So they're not going to say denied.
Right.
They could, but
Right.
I have not experienced that, so I don't know how they deny one. But if you have it in the right information. And that's where, again, it's key of knowing what you have to do.
Well, we have a saying in our industry, who you hire matters. And
Correct.
I really
Sure.
think from a mortgage perspective, it's probably one of the most important things
Yes.
to look into is the qualifications of the loan officer, how long they've been doing it, how diligent, how quickly they answer their phone, how communicative they are.
Communication.
Communication's key to
yeah.
everything.
Oh, yeah.
And the minute anything comes up. So one thing that does come into play is, which realtors are not aware of, MSHDA, yes, they regulate. The only thing they regulate on the realtor side is cost. So nowadays, winning bids, someone might say in their purchase agreement, oh, I'm going to pay the seller's, you know, transfer tax, or I'm going to pay the seller's, commission or something.
Right.
So because the buyer has money to do that. Well, MSHDA doesn't allow that. They don't allow, they're giving money to help you buy, not to pay someone else's expenses.
Right.
So
Understand.
the compliance fee, or the realtor transaction fee, or the doc prep fee, or whatever,
Right.
every realtor labels it differently,
Right.
is capped at $300.
Okay.
So I 100% have had purchase agreements, and it says realtor fee of, $350, and we catch it because we know all these rules.
It's
so
on
we
the
call
purchase
it ahead
agreement.
of time.
Exactly.
So again, communication. So we would call and say, hey, just so you know, I need an addendum that says change this to 300, not 350. And shame on a realtor if they don't do it. I did have one time somebody say that's unnecessary. You need to cover that cost, and I'm like, no, I don't, and that's just the rules. So I send them the rules. So we have it. It's in writing. So if someone
Right.
questions it, we can
It's
get
not
it.
your rule.
Right. It's like, look,
MSHDA's
I
rule.
will get your loan done, but
Right.
here's what, and I'm just communicating to you. The same ways. So the other thing is that which we will do it without a MSHDA transaction, we can escrow for repairs. Well, MSHDA does not, because they know the homeowner doesn't have the money to do different things.
Sure.
So, but if it's weather related in the wintertime, absolutely, there's been times. So if they needed to pour cement and you're in the middle of winter,
Or a
they're not
septic.
going to hold up in transaction.
Yeah.
Or a
You know,
septic.
yeah, so, but things, so the communication of it. So again, knowing the knowledge of it and just turning someone down is not what you do.
Right.
It's, okay, what are the steps we have to take, or who can contribute what? But knowing the guidelines and the rules to it, is what makes it important.
Well, good.
So, in a great program.
Awesome. Well, great. I think it's time for us to wrap up.
Yes.
I'm looking at the clock here. Thank you very much, Michelle, for joining us, and Kristi.
Oh, I'm
Thanks
glad
for
they
having
came.
me.
Thank you.
Yeah,
Yes.
this
It's
was
eye-opener.
very informative. Looking forward to our next podcast and what you need to know about MSHDA. What's
Yes.
going on.
In
So-
more detail.
In more
Yes.
detail. Thank you very
Thank
much.
you.
I appreciate your time.